Ladies and gentlemen, welcome to Live from the Compound. My guest today needs no introduction, and I'm actually, I don't want to say embarrassed, but I'm sheepishly about to do an introduction. And the reason why is you are a professional at this, and I only do this in my spare time. But I'm gonna give my best shot. Wilfred Frost is a British business journalist and television presenter known for anchoring Sky News Breakfast. He spent 5 years as a fund manager at Newton Investment Management, which I did not know about, before launching your broadcast career in 2011. You guys know Wilfred primarily as the host of CNBC's Worldwide Exchange, which aired from 3 in the morning till 5 in the morning?
5 till 6.
5 till 6. All right. But you were the co-host, The Closing Bell with Sarah Eisen.
Mm-hmm.
I was a weekly regular. We had the time of our lives. I think that ran from 2018. Trying to remember when it ended. 22?
I did 18 to 22 on that. 4 years, yeah.
Okay. All right. Wilfred is here to discuss the current state of markets as well as his new weekly show, the Master Investor Podcast, where he interviews legendary investors and business leaders to offer listeners exclusive investing insights and ambition-fueled inspiration. Did you write that?
No, I didn't. You guys wrote that. I'm going to take that off.
Pretty badass.
Yeah.
That title, and I looked at your guest list. I haven't listened to all the episodes. It's pretty apt. You have Ray Dalio. I love the Liz Ann Saunders episode from last week, especially because you gave me a shout out during that. You're getting some incredible guests, and obviously that's a testament to the work that you did while you were here covering business and meeting all these folks.
Yeah, and we had David Solomon as well. We had Dan Niles.
All right, tone it down. No, we got it.
And lots more to come. I mean, the thing that I'm so excited about the podcast is pretty much everyone has said yes that I've asked.
Okay.
Obviously, I haven't scheduled them all yet. It's a weekly drop. And I think I'd like to think two things. One is, as you said, a testament to the groundwork one puts in and building those contacts over time. But I think that there's an interesting offering. So the tagline that I came up with, that you guys have just improved with giving Josh the script there.
Unbelievable, right?
Unbelievable is, where we celebrate and learn from the success of the greatest investors, business leaders, and politicians in the world, giving you, our listeners, the edge. And I think in the UK, there's been something lost about that in the last decade or two. I don't think it applied when I grew up. And in my 6.5 years in America, when I moved back, I kind of was a bit disappointed and surprised by the amount to which we seem to want to criticize success rather than celebrate and learn from it. So that's kind of at the heart of what I'm doing there.
Well, it really seems like you're in a position to bring those animal spirits back in the UK. I feel that if you can build an audience of people who have found huge success investing, and these are not people that they got lucky or their brother-in-law tipped them off to a coin or they accidentally bought NVIDIA and forgot to sell it, but like people that over decades have established credibility, have made money for a lot of other people, not just themselves, have invested on behalf of hospitals and pension funds. Those are the type of people that I think do offer the type of example where your viewers who are maybe only semi-interested in investing might become inspired. So I love that for you.
Absolutely right. And I think, it is important because when you have inflation at, 11% in the UK a couple of years ago, people are losing money if they're just sitting in cash, let alone, I think for the next decade, we're probably going to have over 3%. The latest print in the UK was 3.8%. People have to be smart with this or else they're actually losing. It's not just people don't want to take risk perhaps in the UK, but actually if you're just standing still, you're losing. So I think that's a point. And, our listeners after 8 weeks are roughly half UK, US. It's definitely not just for the UK audience, but I think it gives a slightly different perspective. Me doing it in this format compared to what I used to do for CNBC. It's long form, 45 minutes or so, 30 to 45 minutes an episode, and it's not too tied to the short-term news cycle. It's life lessons from these people, as well as, politicians. We had Jack Lew so far. We've got Liz Truss.
Former Treasury Secretary Jack Lew.
We've got Liz Truss coming up. We've got Nick Clegg coming up, two former British politicians who have different perspectives on the economy and business. So I think it's life lessons as well as investing tips. Ultimately, either way, if you listen, I think we'll give you an edge.
As you're speaking, I'm just looking at the FTSE 100. I think a lot of listeners or viewers of this will be surprised to learn that it's actually doing quite well.
They'd be like, the what?
Yeah.
What are we talking about?
So these are
year to date.
These
we
are the
are
largest,
ahead.
most consequential companies in England, and you guys have a stock market now.
It's depressing that you have to describe what the FTSE 100 is, but you probably do.
I sort of do.
Yeah, but it's very rare.
Yeah.
In my entire time in the markets, which was since I graduated in 2008, that we're outperforming the US, because the US has been the only game in town. I mean, I think you still are the only game in town, to be clear, but in a relative sense, it's not been a bad year in terms of stock market performance. And it's a similar kind of theme you're seeing here. You're seeing a bit of the value or quality pick up relative to the growth. We don't have much growth, but there's a price for everything.
Well, right. So what you lack is the type of globally dominant technology giants that have been one of the driving forces of earnings growth and market cap growth. So NVIDIA, I believe, is larger than the entire FTSE.
Oh, easily. At 4.4 trillion. I think you've got 5 companies bigger than separately bigger than the FTSE 100 combined.
And then I was looking at some of the components of the FTSE in preparation for this, and I see companies like Rolls-Royce, which people associate with the cars, but I think BMW makes the cars now. They don't even do that. They're making mini nuclear reactors and jet engines, and it's tech.
Oh, historically we were fantastic engineers. We developed Concorde, which flew quicker across the Atlantic in 1970s than people can do today. So it's a great shame. But this comes back to it. It is in our DNA. Britain, as a mindset towards success in capitalism, I've always thought is somewhere between continental Europe and the US. And I, growing up, always believed, and maybe this is because my father had such an affinity with America and the household I grew up in, but that we were much closer to the US than we were to continental Europe. I still believe that if you look at our history, if you look at our DNA, you look at some of those success stories, but there's just been some kind of something that's held it back. And I think it's there. I will always be a massive long-term bull on the United Kingdom, but we definitely have slowed down of late.
I think first things first, stopping the listings from leaving should be like priority one. And the way you do that is with less onerous regulation. But you look at this company called Ferguson, trades here in the United States. It was a U.S. company acquired by the British company. I think it spent 50 years as a British company. And then they left and relisted here because they looked at the multiple that they were getting on their earnings, and they looked at their U.S.-based competitors, and they said, this is ridiculous. We should at least be getting a similar multiple to what our competitors get. Hasn't worked, still very cheap stock. But I think we want to stop that for you. And then I also think the rebirth of the IPO is something that the public gets excited for.
Yeah, so it's interesting. I think the listing problem is almost the kind of public face of the issue, but I don't think it's the core issue, because it is just a fact that, capital multiple in the S&P is 22 times versus 12, 13 times in the UK. So it's very hard to argue against relisting if you're a business that is kind of comparable to what's in the other country.
Right.
Particularly if you're about to IPO, and some of the fintech successes in the UK are choosing to IPO over here. It's a problem. It'd be great to correct, but the key thing is where these companies are headquartered and based. And can we make sure that if you are the next Arm Holdings, for example, which is our one big tech success story of the last decade, listed here after being bought by a Japanese firm and private for 5 or 6 years, can they develop and stay physically based in the UK? Because that is more important to me. I think that you want to make sure we remain, and I think this is a question mark at the moment, attractive to the best global talent in the world, and most importantly, to our domestic talent. And if you can show those people this is a place where your ideas will be rewarded and you can have a great career, then we're still fine long term. And the listing thing is a problem. We need to address it because it raises the working capital costs of the company there. If you're going to have to raise capital and it costs you more, these are all factors. But I think worse would be as if you see Arm, it chose to list in the US, but if it says we're closing 50% of our research facility in Cambridge and we're moving it to the Cambridge here. Right. Do you know what I mean? That would be a much bigger problem.
It's such an important point, because when I'm invested in a stock and I look at who's the CEO and I try to understand the family tree, like where did this person come from? So one of my bigger investments is in Uber, and Dara, of course, comes from like
I remember you talking about that
family tree with Expedia and Barry Diller. Like you look at all these companies now, SaaS software companies, where the founder came out of Google. You look at, like, in the semiconductor industry, there's this whole chain of people, how they got to where they are now. You kind of need that, and it takes generations.
Mhm.
But the sooner you restart that process, because you're not just giving birth to companies that then list their IPO. Think about all of the executives and engineers at these tech firms. At a certain point, they want to leave and do their own startup, and you want there to be an ecosystem so that they can actually staff that startup locally, not just go out to Palo Alto.
Yeah, and what we've been poor at in the tech industry in particular, I think, in the last 5 to 10 years, is allowing the early, like, unicorn type success stories to scale in the UK.
Right.
So actually, we've got some of the brightest minds. Our education, I think, is still very, very good. And
we don't need no education.
And people, well, that's true. But people are coming up, British song, but the people are coming up with, some of these ideas, and you're developing these companies, but then can they get the access to capital and talent to really scale? And, they're being picked off by American PE. And But again, they're still sort of headquartered there, but they need to be able to grow further. I'm
curious what your thoughts are about who the audience is for business, financial media and business in the UK. The great thing about your podcast is people all over the world are going to listen to it, and I'm sure they already are. Well, it's a really interesting question. So, I was up, rewind the clock a bit. When I moved out here, December 2015, I had been 2 years at CNBC London, came out here. I was blown away by the scale of interest in what is a sort of niche area of journalism, business news. And I think in America, CNBC and its rivals, which it leaves in the dust, I love CNBC, are fighting for maybe 25% potential audience of the population, who are just people who are interested in success, want to be successful themselves, but they don't necessarily. It's tens of millions of households. Tens of millions of households that would tune in if you can get them to pay attention. And these are people who didn't have to work in finance, but they may have made their money in any area, but they want to be interested in the stock market and success stories and ambition and celebrating all of those things. I think in the UK, the sort of CNBC and Bloomberg are fighting for 1%. It's literally just the people that work in finance who might have it on in the office, but probably not at home. And so there's a big, big gap between the two. I actually think in the UK, there's much more than that 1 or 2% of the population out there that are interested. Oh, definitely. But it's probably not 25, and I think it's 10 to 15. And I think, by the way, that market is also served as if it is only 1 or 2%. So I think here there's fierce competition for a podcast like this, as present company very much included in that sense. And so I think it's a big, big chunk of people, and we'll find out in the weeks ahead. By the way, the early numbers make me think it's right. That I just think there's a lot of people that want to celebrate success and not just always have this like tone of envy and criticism. Which your episode with Tom Lee recently, you guys were talking about this, about people that got jealous of crypto successes. By the way, I'm the person that hasn't bought every single time. You're the last. I'm the last buyer. Okay, but I'm not jealous of any of the success stories. Right. I've got some friends that have made a fortune from it, paid off their mortgages. I think fantastic, good for you. I wish I joined you, but I'm not envious that you've done that. And I think way more people have that kind of mindset than of almost sort of publicized in the UK. So I want to ask you if you think this is true. I've been to Europe. I've spoken with people that work in the financial services industry. I've spoken with a lot of financial advisors. I once went to an event, British company put on this event on the continent, and they assembled financial advisors from every European country in Berlin for 3 days on asset allocation and basically fund managers pitching. Berlin's fun, right? The audience. Berlin was fun. What I heard from people, and I know you see Britain as being more similar to the United States than the rest of Europe, but what I heard, including from British financial advisors, is that as a financial advisor, it's sort of really hard to get fired because most of them work at banks, and these banks are 400 years old. And the families who are wealthy now are the same families who were wealthy 400 years ago. It's people that had land, effectively. And so as a result, the advisors get switched around, but the family never leaves the bank. And so they sort of see themselves as not as entrepreneurial as advisors in America. They sort of see themselves more as, well, the relationship is really between this family in Amsterdam and this bank that they've been at for 200 years. And I'm the part that can get kicked out. So what I have to do is not take too much risk. Whereas here in America, we have to take risk on behalf of our clients. They expect us to do so. They don't like it when it goes poorly, but we do reap the benefit of having made people a lot of money when it goes well.
Mm-hmm.
And I just didn't really hear that mindset in talking to British and European financial advisors. Am I like overgeneralizing, or do you think there's some element of that?
I've never heard that specifically, but everything you're saying kind of tallies. I can totally believe that. And I'd say it slightly differently, which is, so I started my career in finance at Newton Investment Management, and it was your classic, slightly stale, loved everyone I worked with there, but slightly stale, long-only asset manager. Now, I love the way my investment knowledge is kind of played out, because it was a great learning tool. I did all the classic DCFs,
picking stocks, analyzing companies.
Are we going to switch our position from Vodafone to British Telecom? We'll spend a year debating it. Right. And by the time we shift, one's moved 5%, the others move 5%, and then they stay flat for a decade anyway. But it was all very good grounding. And then I switched to the Asia desk, which is a little bit more dynamic, but it still wasn't particularly dynamic. And then I came out here for CNBC, where people like Tom Lee, people like you, are being quicker on the money. You're more focused on things like momentum and sentiment. And the first year I'm thinking, sorry guys, this is a cheaper stock, so it's better than the other one, or whatever, And so I think there's definitely that difference. The traditional asset management industry is the same as it is here, but you don't have as big of a new retail trader sentiment, and you don't have that influencing what the market does as much, and thus allowing you guys to build success by looking at that and giving it a weight in how you put up your decisions.
Is there a cultural difference, though, in the willingness to take risk that can be overcome?
Definitely. But and the willingness to take risk, I think, is, again, somewhere between the average in continental Europe and in the US. How do you overcome that? It's hard.
Yeah.
And I'm not going to sit there on the podcast and tell people to take risks, but I'm going to give them as much of an education and the tools, if they so desire, that hopefully they'll be in a better place to do it. But I mean, yeah, it's an interesting
part of it may be part of it may be structural. Sometime in the 1990s, we basically decided as a society here in the US that we were going to put the onus of retirement directly on the household. So we went away from these sort of defined benefit pension schemes to fund retirement. And we said instead, ladies and gentlemen, this is the 401k. You choose your own funds. You make your own decisions about how much exposure to risk versus how little. And it's on you. The company is not going to pay you until you're 85 years old. There's no pension anymore.
Well, we did that too, maybe 5 or so years later.
Okay.
And yet we're stuck in between both. So with much fewer defined contribution beneficiaries of those types of pensions now, and yet the defined benefit pension isn't as embraced as it is here. So that's a great snapshot for the difference when I moved here versus the UK. People here are so actively engaged on their own 401k.
Almost because they have to be.
Yeah. Whereas in the UK, people don't probably save enough into it in the first place, but they won't have a slightest clue about what's in it. Yeah. It'll be managed by some arm of the corporate that they work for. Right. Not even necessarily in the asset management, which will be outsourced again to some kind of pension fund manager.
Right.
It'll be pretty heavily in bonds as well. So it's a whole mindset that needs to change.
Yeah. I wanted to ask you, so my take on the way finance is covered here on the part of big media, because I want to talk to you about what you think about, you mentioned being bullish on traditional media, bullish on the news. So the way I've always thought of it is CNBC covers the markets like sports.
Yeah.
I've always looked at it like it's ESPN for money.
Totally.
Which is what I love about it. Mm-hmm. And I think that's what the viewers love. Bloomberg is a little bit more B2B, and I almost feel like they are covering markets through the lens of data and analysis, because that's their main business. And then Fox Business really seems to cover it almost as like a different version of politics, which is fine. There's room for everybody.
Yeah.
In the UK, you just don't have that many outlets that are specifically focused on markets. But you are bullish on the concept of traditional news, maybe not specifically cable itself, but just like sort of having these news outlets that are large, dominant, and that do a really good job of covering whatever it is, politics, et cetera.
I'm really bullish on live TV, particularly relative to how it's priced. If there was a price for all of this, obviously you can look at some of the stocks which trade off that. ITV in the UK is on a sort of 8 times PE. It'll be really interesting to see what PE the new Comcast spin-off Versant starts off at.
So Versant will be MSNBC, CNBC, and the Golf Channel.
And I bet it'll start on a very low PE, and everything has to have a price. I'd be a buyer of that potentially. But my point, and my day job in the UK is mainstream news. Sky News is mainstream, and the podcast is on the side. I think that expectations are so low. One, Sky News you can't trade because it's owned by Sky, which is owned by Comcast. But I think if it was trading right now, it'd be on a very low PE. And I think that's wrong because all of the sort of new media that has evolved, let's say over the last decade, has had so much money poured into it. So there's, the high quality drama and docs that can be on Netflix or Disney Plus or HBO or wherever.
Yeah.
There's the kind of news-ish type rivals of these types of podcasts, which are all fantastic. But it's hard to see how those new media threats could have more investment in the next decade relative to old media than they've had.
Oh, it's interesting.
And I think live television outside of sports has been really hollowed out. And there's always a need for it. Now, I totally agree with your framing of CNBC, which is it covers it like sports. So it makes there always be a need for that niche audience, which is quite a sizable niche.
To stay tuned in.
Yeah. And in mainstream news, you don't have that reason as often, but there will always be a requirement for live television news. And the competition is lower than it used to be because it's been hollowed out. And you see that here. There's cost cutting of the big cable news channels here.
So if something live TV really resonates, it no longer has as much competition.
Exactly.
And then all of a sudden you've got pricing power on the advertisements that are going to run during it because it becomes bigger as a result of not being as competitive.
Exactly right. And I think that, on top of that, we're about to relaunch The Breakfast Show. My new co-anchor and I, Sophie Ridge, in they haven't announced the date yet, but it's in the next couple of months. I think the date gets announced next week. It'll be in the sort of late part of the year. And I think that we can just give it a bit more energy and freshness as well, which makes a big difference. I think if you throw some, I think, our aim will be to bring a warmth and a relatability to The Breakfast Show, intelligent conversation, but in a very inviting way, with a sort of unscripted jeopardy to it. So this is the thing that live television
unexpected moments
that podcasts don't.
Yeah.
The viewer knows that it's live, whether that's the two presenters chatting and something going wrong or right or funny.
Right.
A reporter joining with a report from the field or in the studio, or a live interview, particularly when you're holding someone to account, a business leader or a politician.
Yeah.
There is a jeopardy about it being live and not knowing what's going to happen. That 10-minute conversation could contain less in it, and it would still be more attractive to the viewer than a recorded 10-minute version of it because it's live. And, I have mainly, I think that because of my own experience in TV, but also from watching back, the tens of thousands of interviews my late father did, that aspect of it being live, the unpredictability about it, I think the viewer knows that and they're more drawn in, all else equal.
So I'm glad you brought that up because I wanted to talk about the legacy of what your father accomplished as arguably one of the most important television journalists, or maybe just journalists, period, of the 20th century. For people who are unaware, what could we tell them about David Frost and sort of the life's work that you are now doing to remind people of how important journalism is?
Yeah, so Dad started on TV age 22 in 1962 and continued for over 50 years till the day he died in
it's incredible.
2013. Yeah, so 51 years on screen, and did it, across actually not just 2 continents, because he was pretty big in Australia and the Middle East as well, like across the world, but particularly UK and US, and across so many different genres as well. He wasn't just a business journalist or a politics journalist or an entertainment or sports. Like anyone, you could think of in the last 50 years he interviewed. I think you were off that week, but I was listening to the episode Michael and the team were discussing when Hulk Hogan died.
Yeah.
About people who are globally famous, like Hulk Hogan was. And they listed the other people that they thought were in that category in the last 50 years. I think every single one of the ones they listed, Dad had interviewed.
Right.
At times, multiple times. Like the Beatles, Ali, Elton John. It's extraordinary the spread that Dad did that with. And, after he died in 2013, I picked up the reins of his company, and I bought back and done various deals to digitize, catalog, and buy the rights of interviews that he's done. I now control about 80% of the 10,000 plus interviews he's done. And, I've done a series of things. There was a podcast series called The Frost Tapes, and now a TV series called David Frost Versus, which came out earlier this year on MSNBC. It's not on a streamer yet in the US, but it will be soon. And it was to really try and go back into those moments in history where Dad had a particular front row seat to them unfolding. And, it's been a
So I want to ask you about the most famous example. I don't think I was born. I was not born yet. You certainly weren't. But the Frost-Nixon interview, which, of course, there's a famous movie about that episode. But I think your dad is widely credited with the person who basically broke the story wide open when talking with President Nixon and getting Nixon to a point where he just couldn't take it anymore. And maybe you could tell us a little bit more.
Yep.
We have a young audience on YouTube, but
totally,
this is probably fascinating to them.
Yeah, I think this is the most famous interview he did because he sort of became a part of history with it. And so obviously Nixon was forced to resign in 1974 largely because of the Watergate scandal. To be clear, Dad didn't break that story, which broke a year or so before. That was amazing journalists like Woodward and Bernstein and others.
Washington Post.
Washington Post guys, exactly. But Dad was very much involved in the U.S. broadcast media at the time and covering it as it broke, but he didn't break the story. Nixon was forced to resign in 74, and then famously his vice president, Gerald Ford, who became president, immediately pardoned him. So he never stood trial for his crimes.
Right.
And Dad took on the media establishment, the networks here, NBC, ABC, and CBS, to get the broadcast interview with Nixon. He outbid them.
Because someone was going to get him to talk.
Someone was going to get him to talk, and it took 3 years. It was by the time the interviews happened, it was 1977, though he did the deal in 75.
I may have been born then.
Yeah, okay. I was going to say when you were saying that, I was like, really?
I may have been. Okay.
And then he outbid the networks. He paid Nixon $600,000 to get the exclusive interviews, which inflation adjusted is $2.1 million. And he's just a presenter, Dad. He's not a business at this point. And then because he outbid the networks, they were so pissed off they didn't want to buy it off him. So Dad then had to build together 140 local TV stations to distribute it. He kind of built a cable channel before it became the case.
That's wild.
And and then had to fund.
Because otherwise he would have put up all that money for nothing.
Well, but
it would have been an underwhelming thing.
But that process was incredibly expensive too. So the 2-year process was, cost him about $1.5 million in total, which, is inflation adjusted, then you're closing in on $10 million Dad was on the hook for. And then he sat down for what ended up being 28 hours across 4 weeks of recording sessions with Nixon. And he had to get Nixon to admit wrongdoing and to apologize.
28 hours sounds like you can get somebody to admit to just about anything.
Well, I mean, thank God he paid so much money to secure that time.
Yeah.
And he wore him down over time. By the way, those 28 hours I've watched from start to finish, and I don't recommend it. It's pretty dry.
Do we have something?
But this bit, I think, is breathtaking.
So let's show people what we're talking about.
In the Houston plan, it's stated very clearly, use of this technique is clearly illegal. It amounts to burglary. Why did you approve a plan that included an element like that was clearly illegal?
Yes, well, burglary is the word, but another way to put it is that you get the information that you need. There are some actions that have to be covert. By covert, let me put it this way.
Or in this case, illegal.
That's right. Well, let me say that it is legal, in my view.
So what, in a sense, you're saying is that there are certain situations and the Houston plan, or that part of it was one of them, where the president can decide that it's in the best interest of the nation or something, and do something illegal.
Well, when the president does it, that means that it is not illegal.
By definition.
Exactly.
That's the money shot. That's the moment that people were.
Now we've got Bob Woodward there reflecting on it, but that is the moment after. By the way, the first half of those 28 hours didn't go that well for Dad, and so the pressure was building, and that was the moment where it turned, where he knew he had a line that would resonate. In fact, they were talking about the Houston plan, not Watergate, and as it goes on, he gets him to admit wrongdoing and apologize to the American people about Watergate. And
but the poker face, there was no your dad did not do like a gotcha, like there it is. He kept going very calmly.
So that very moment, I remember him talking about years later, and I remember him saying, essentially, the gravy train had arrived, and you wanted it to keep coming and more to come. So you don't want to say, aha. Or you don't want to be like...
Can you imagine the serotonin fireworks going on in his brain at that moment?
Inside, he's thinking, I thought I was going to have to sell my house. Right now, this is the first moment I think I'm going to be able to keep my house. But you have to keep it together.
Right.
And honestly, there's different styles to interviewing and different things that work. Dad, under unbelievable pressure, stuck to his guns, stuck to his DNA, and he got there with Nixon. And then the pressure on him going into it, you literally can't make it up. He mortgaged his life to do that interview, and he stuck to his style of interviewing. It worked.
Who was in the movie? I should
Michael
rewatch
Sheen
this.
played Dad, and Frank Langella played Nixon.
Oh, Langella is
he's fantastic.
That's one of the greatest actors ever.
Oh, and do you know what? The two of them inhabited those roles for 3 years because it was a play in London to great success for about a year. Then it moved to Broadway for about a year, and then it was a film, and then you had all the opening nights and stuff. It was, and we used to. I was at university around that period of time, so it was like late teens, 20s. It was great fun. It came in late in Dad's life, so it gave him a wonderful boost because kind of made him a sort of pseudo movie star right in the twilight of his life. And obviously, my brothers and I were like signed up to all the opening nights and premieres and awards nights. And whenever we'd see Michael at any of them, we'd always joke, being like, "Dad, how are you doing?" Which he didn't really find that funny, but he had to go along with it.
It's so funny how we're still debating what the president can and can't do if they quote unquote believe it's in the best interest of the country. Not for us to get into a whole political discussion, but
it's eerie that.
It's eerie, the echoes, and I don't think it's an accident that George Clooney brought back the play Good Night and Good Luck.
I love that movie. I haven't seen the play.
So it's a film, but they made it a play this summer, and Clooney starred in it. And I don't think that it's random. Obviously, I think we still live with this issue to this day.
Yeah. Well, someone should bring back Frost Nixon to Broadway.
I would go. What else do we want to do? I do want to ask you about the new show on Sky News, just for our American viewers and listeners. This is a really big show. Like, this is the one.
This is
you're like Kathy Lee Gifford. The equivalent,
something like that.
Yeah. Okay.
Listen, it's a dream come true. I grew up, obviously with my father doing breakfast television in the UK, and I can't quite believe that that's where I'm at now myself. And I think there's a huge opportunity. I think Sky News has all of the ingredients to be the biggest network in the UK, and I think that Sophie and I, who's my new co-anchor, can harness that. And I think there's lots of attractive things about it, more free-flowing, less scripted, warmer, intelligent but inviting. And I think we can bring the biggest guests in the world. From British politics to American business.
I'll pack my bag. You just give.
You're on, man. You're on. But I think the biggest thing is unleashing and harnessing the talent internal at Sky News, which I think is a sleeping giant.
That's awesome. And I think, do we have something from Sky News? Yeah. Well, listen, I want to tell you, I love when I see you back stateside. We had a lot of fun on Closing Bell, you and I, and especially when I was in person. And it's anytime I see you back on CNBC, I'm so excited about it. So,
well, I really appreciate the kind words. I really appreciate joining the podcast as well, because I love listening, and I love the way you guys have harnessed great content and minds in such a kind of conversational way. It's I take lessons from it, and it's been a pleasure joining you.
Well, good luck with the podcast, and thanks for stopping by, and let's do this again.
Would love to.
All
Cheers,
right.
Josh.
Thank you so much. Guys, this has been Wilfred Frost, ladies and gentlemen. Make sure that you are following his new podcast. What's it called?
The Master Investor Podcast with Wilfred Frost, available wherever you get your podcasts.
All right. Thanks for watching. We'll talk to you soon.
Thanks, Josh.